Boy, did Ergo decide to wake up today. I am madly impressed with the current price action that Ergo is showing us. We're currently sitting at about $1.86. And I wasn't watching the charts today, but I saw Ergo get to like $1.70, and then now it's at $1.86. And a couple days ago we were at like $1.50. And it's just the price action today has been unbelievable. So I want to take a quick minute, do a video on how I'm monitoring this Ergo price action and some very, very simple key things that I'm doing on TradingView and some simple moving averages and RSI combos that I'm doing that you can follow along and do as well. I really like what Dan does over on the Crypto Capital Venture side for Cardano charts, and maybe we can replicate that on Ergo and watch this thing come out of the bear market in full force into the next bull market and make sure that we're watching what's going on. As I'm a long-term Ergo holder. We're going to talk about some things that traders do and some metrics that they look at, but I'm a long-term Ergo holder. I will let you know if I'm trading or not, which I'm currently not trading. I bought ERG today, and that's why I was watching the price action so much, because my ERG Bitcoin transaction was not getting filled as fast as normal because just a lot of changes in the market, not enough liquidity in the Ergo Bitcoin pair. And so I was looking at this today, and I just want to share what I was looking at. So this is the Ergo USDT pair on TradingView, and I use the free version of TradingView. So everything I do here, you will be able to do as well. And I'm just going to show you three things: a 50-day simple moving average, 200-day simple moving average, and an RSI. So let's go ahead and get the 50 and 200-day. And the 50 is the blue line. 50-day, we're on the daily chart up here, 1-day daily chart. And then we have the orange is the 200-day simple moving average. And you can see today, this is us today. We have printed out 1, 2, 3, 4, 5, 6 daily candles green in a row. We have crossed the 50-day simple moving average and the 200-day simple moving average. And this is technically the cross. Then today is going to be a confirmation close above the 200-day simple moving average, which is a huge bullish signal. And something I think we need to pay attention to as an Ergo community. Now, I do want to preface by saying that this is an unsustainable move, okay? If you look back here, we have a same type of move with 1, 2, 3, 4, 5 green candles printed in a row, followed by about a 2.5-month accumulation period. I would not be surprised to see the same thing happen again. This type of a move is just unsustainable. Technically, you cannot go up like this forever. Eventually, it's just going to be going straight up, which is impossible. So I would expect to see maybe a green day tomorrow, but eventually, whether it's tomorrow or in 2 or 3 days, I would expect to see a red candle back down to the 200-day simple moving average, or like a red green candle combo for a couple days, and then a drop back down to the 200-day simple moving average. Okay. I bought here today at this $1.80 range, but if it keeps going up, I would probably hold off on buying until it has some time to digest this move upwards and come down a little bit. Now, what this price action lends to with these 50 and 200-day simple moving averages, you can see this whole bear market kind of in 2022 down here, and in 2023, we've been underneath this 200-day simple moving average, and you can see we popped above it in September for about 2 or 3 months. Well, maybe this is like August to September, so about a month. But that's the only time we popped above this 200-day simple moving average, and we quickly came back under and have not crossed back again above it until today. So, I mean, this right here is a traditional very bullish thing, and I think it's something we should be watching. Furthermore, as we cross above the 50 and 200-day simple moving average, we have a higher potential of our 50-day moving average crossing above our 200-day moving average. You can kind of see this right back here where the 50 crosses above the 200, and we can show all the other examples in this chart, but 50 crossing above 200 is a bullish indicator, although it is a lagging indicator of sorts. You can see we had this huge green candle right here, but our 50 didn't cross our 200 until, what is that, 2 or 3 weeks after, right? So it's a lagging indicator, yes, right? It hasn't crossed yet, although we've had all these green candles. But if it does cross, it indicates a longer term bullish pattern. We can see the same thing back here. Well, Ergo's chart's not really old enough, but if it was old enough back here, the 50 would cross over the 200 and it would stay above. And then it would cross under, and then it would come over here and it would cross above, and then that leads into the next bull market. So the 50 crossing the 200-day simple moving average on the Ergo chart is something we should watch for. When it happens, this was kind of like a fake out, kind of like a bear bear market rally, but I don't think this is going to be a bear market rally like last time. I think the crypto market is ready to be done with the bear market rally, and I would love to see when, maybe it's in a month or 2 months, when these officially cross. So these are our two simple moving averages that we'll be watching. Again, I think the Ergo chart is very simple. It's very subject to overall market sentiment. It's very subject to, these simple moving averages and patterns. It's not a complex product, and it doesn't really make decisions on its own. It's not like a commodity or Bitcoin where it can have its own news and make its own kind of changes. Ergo is much an asset that's controlled by other assets just because it's smaller in nature. And I think that really helps us simplify this process. So these are our moving averages. Let's bring in the RSI. And you'll see this is our RSI in TradingView. You can pull up the same one and add it to your chart. But the purple is going to be our RSI and the yellow is going to be a moving average of the RSI, okay? You can see right here in a style, it says, RSI is purple. The RSI based moving average is yellow. Now, one thing I want to point out right here is we today are massively overbought, all right? If you are not familiar with the RSI, when you get above 70, that means that you are overbought. And if you're a trader, technically you should be selling your asset. If you get below 30, you are oversold. And as a trader, you should be buying the asset in expectations that it comes back up to, 40, 50, 60, 70, and then overbought again. So today we are crossing over the overbought territory, which is a big signal not to buy more in traditional trading. You can also see that back here, when we printed all these green candles, we again were overbought. So, I mean, correlation is not causation, but I can show you time and time again, because again, Ergo is a simple asset. It doesn't make decisions on its own. Right here, when it peaked, we were overbought. Right here, when it peaked, we were overbought. Right here, when it peaked, we were overbought. Right here, when it peaked, we were overbought, 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 and now overbought. In these scenarios, there was a big price drop with a big RSI drop, but I don't think that's the case this time. Right here, we were overbought. We did a lot of green candles, became overbought, and then the RSI came down to about 31. It almost hit oversold again, but our price action did not reflect a huge dip. Our price action stayed kind of in this choppy accumulation zone, maybe went down about 10 cents or so from, let's see, about $1.90 to about $1.30. So about a 50-cent drop, which I guess percentage wise is a big percentage wise, maybe about 25%. But as far as the other asset over there, back in when it's $10, $20, the price action is not as big as you would imagine based on this RSI. I think we could potentially be seeing the same thing here. We get a little overbought. We take a little 1 or 2 months to digest that overbought and let our overbought become into an oversold before popping again. Gareth Soloway says this thing about how, you have big price action and then it takes time for the market to digest that price action. I think we could be seeing this right here. Big price action. We just need time to digest and let this price point of about $1.90 not be an overbought price point, but maybe be an oversold price point. So that's what I'm going to be watching on this RSI. I want to see when the RSI gets lower down to about this 50 range and 40 and 30 and see where our price is then. This is not to say that I'm not going to be buying ERG. Anything under $2 is a great entry point, I think, and I will be buying. Overall, I'm a long-term holder. I'm not a trader, but I do like to look at these things to see, is my asset that I'm buying overbought or oversold at this time? So this is the moving average, the 50, 200-day moving average and the RSI combo that I'm watching, and I wanted to share with you. We can also do some things is like draw in some trend lines here. Gareth always a big proponent of trend lines. And you can see we probably got some type of trend line right here. These are very good for support and resistance. You can see we're, resistance, resistance, resistance. But then this flips to support in the bull market, right? And then we have, support. Again, then we have resistance. You can just see this happening again. It became support, and now will it become resistance? Eventually, it will become resistance again. It's just when. Is it in a month, in 2 months, in 3 months? So we can come in here and kind of draw these trend lines. You can also see that if we take, I was looking at this earlier, if we take this low that we are right now, this low that we have, a local low, and then kind of like this pivot high that we're dealing with right here, if you say that is kind of sitting in this channel a little bit, you know, and then you zoom in here, Ergo is trying to break above resistance. So I don't know exactly. I mean, trend lines are a little speculative. You can draw it here, or maybe you can like pull it down just a tad and say it's like right here, or say you want it to be like right here. I think trend lines, as far as very small decimal points go, are not super specific, but I do think they're helpful in a broad sense that say if you put it here, and you zoom out a little, you can say, well, it's running into some resistance and eventually this can make it support. I don't think it's very accurate on a penny or a 50-cent scale, especially because I like to use the thicker lines, but I think the thicker lines help us not be so detailed where we're putting our trend lines. Let's just say that we're getting close into some resistance. We've broken two key levels of moving average support, but we're coming into some resistance. So maybe this resistance will help us to calm down, hit a couple red candles so we can get back to our 200 and then accumulate more and then pop above this resistance and move on to the next one. All right. So that's the price action I'm looking at on the Ergo chart. Hopefully, I mean, this kind of makes some sense to you what I'm looking at, and hopefully we can keep monitoring this over the next weeks and months as we stay in this bear market moving into the bull market. Hopefully you like the content. I think this is really interesting stuff to look at, and I just want to make a trading video to show you what I'm looking at. All right. Hope everyone's having a good weekend. We really love the Ergo price action, and we will see you in the next video.